Hey guys, what's up? How's it going? My name is Rob and welcome back once again for another video. In today's video, we're going to be talking all about Canadian dividend stocks. I'm going to be showing you guys the stocks I'm going to be buying today. I'll give you guys an update on our Canadian-based dividend portfolio we've been growing over the past year or so, and I'll show you guys how much dividend income we've been making as well as how our stocks are doing. So I'm not going to waste too much time here. Let's jump inside my Wealth Simple Trade portfolio and let's see how our stocks are doing at the start of this Monday morning. Alright guys, so it's been pretty interesting in the market over the past week or so with everything going on, with all the news around GameStop and whatnot, and crypto and whatnot. As you guys can see here, cryptocurrency is actually up quite a bit. So in today's video, we're going to be talking like usual about dividend stocks, and I want to kind of bring it back to the sense of, one thing I really like about dividend investing is it's a nice, safe, consistent way to invest. And even though we're seeing some nice, good, like our portfolio is benefiting quite a bit right now, we're still kind of locking in like some nice a type of investing that's kind of really generally safe. And I think a lot of people are buying a lot of hype stocks right now and just things like crypto and stuff like that. I'm not saying those things aren't bad investments. I'm just saying that overall I think there's a little bit more risk to them. And the nice thing about like dividend stocks is it's just a nice way to kind of get some earnings over time, but also not get too crazy. As long as you buy good quality stocks, not get too crazy with things, especially if we get like a big crash or a big dip or something, which when it comes to some of these other things, I think are probably most likely to happen. But anyways, the first thing we're going to do here is we're going to go a quick little overview of the portfolio. The portfolio is currently sitting at about $19,000 in our TFSA on Wealth Simple Trade. Over the past day, since this morning, our stocks are up $74. Over the past week, we are up 4%, so quite a bit of gain in the past week actually. Stock market had a nice little jump up there. Over the past month, we're up 2%. Over the past 3 months, we're up 6%. And then over the past year, we're up 8%. And then all time, it should be roughly the same at about $1,428. So as you guys can see, like the portfolio over time is starting to get there. It's starting to grow. Like I said, it is slow, but it's slowly starting to increase and we're starting to get some benefit. And that will just keep growing as time goes on, because remember, we're buying more dividend stocks, which equals a higher yield, which will then allow us to buy more dividend stocks and then get a higher yield and so forth and so forth. So, like I said, it's a little bit slower than some of the other ways that people are currently looking to make money, but I think it's one of the more safer and smarter ways, especially for long-term growth. And if you're putting money into a TFSA, definitely I would say good safe Canadian dividend stocks are one of the best ways to do it. So going down here, I'll give you guys a quick little update on the portfolio, and we'll see how some of our stocks are doing. And I'll show you guys the stocks I'm going to be buying today. And it's not going to be anything too crazy. It's going to be pretty much the norm, buying the same old stuff. I know it's kind of boring, but it's just the way it is. So anyways, the first stock we have here is Algonquin Power Utilities. This is the one we bought last week, I believe. Currently up about 3.45%. We currently own 16 shares, so that's doing not too bad for us. But like I mentioned, AQN is a bit of a long-term hold. Next stock we have in our portfolio is BIP.UN, which is Brookfield Infrastructure Partners. This is one we recently bought. We bought one share of this, and I'm definitely going to be looking to add to buy more. In fact, I probably will be buying a share or two of that today, because I only have one share currently inside the portfolio. It's actually a brand new stock that we added recently, I think over a couple of weeks ago, and it's like just a nice way to kind of diversify the portfolio. And that is definitely one I most likely will buy today and kind of grow over time, because it is one of my smallest holdings. Going downwards here, we have some more of the stable, secure, really good high quality Canadian stocks that we all know. Ones like CNR here, we have a small holding of CNR that I'm looking to grow over time, currently down to -2%, but that will most likely increase as time goes on, because I do think it is a good long-term buy. Next up we have is Ambridge, which is actually doing quite well recently. Ambridge is starting to kind of bounce back a little bit. They had their dividend increase earlier this year, and with the market going kind of up, they kind of pulled Ambridge up quite a bit, and it was like kind of trailing down over the past couple of years quite a bit. So Ambridge could be one of those stocks that I think maybe, depending on when you started buying it and how long you've been holding it, could probably be a good buy right now. And I do have it inside some ETFs, so I think it's doing pretty good here. But we do have a few single shares up currently 10% over the past little while, so quite good gains there. Fortis is a long-term buy. We've been buying quite a bit on this channel. It is a stock I do want to buy more for this year. We currently have about 10 shares, which is $500, currently down at -5%. They've kind of been, kind of not going up too much, but also not going too low too much. It's kind of just been pretty consistent, sitting at around that zero mark. Next up we have is some of the Reits here, and some of these are like the higher riskier Reits. So we have H&R REIT, which we have about $1,524. We had a lot of money in a REIT for the main purpose of just getting that monthly dividend income, as well as some of these REITs were trading down quite a bit. But over the past week or so, they've run up quite a bit. H&R REIT up 10%, so some pretty good gains over the past week. And being down 40% year over year, I still think it's got a lot of growth to go. Same with like stocks like RioCan and whatnot, which we also have inside this portfolio. RioCan is doing a little bit better than H&R REIT, which is expected because it's kind of like the bigger company. But I think they're both going to do well. You see RioCan is actually up 4%, so that's actually pretty nice. I thought REITs might take a little bit longer to recover, but it looks like they're doing pretty good. And I will go over the dividends that I got over the past couple days because we did get some dividends, so I'll do that kind of towards the end of the video as well, and I'll talk about my dividend spreadsheet as well for you guys who want to see that. But the other big stock that I have inside my portfolio, one I'm a really big fan of, is Manulife. I currently own about 1,000 shares of Manulife. 42 shares of Manulife, which is about $1,000, up 14%. So this is a really good stock. I think this is a really good buy right now, and it has been for the past year or so, and it's still down 8%. So I still think there's lots of growth, and it is a solid company. Going down here, we have some of the bigger ones that have performed quite well for us, and that's TransAlta Renewables, up 27%. Renewable stocks have done really well, as I continue to tell you guys as time goes on. And I never really predicted this. I just kind of got lucky with it over the past month. It is down 7%, but if we go over the past year, it is up 24%. So that doesn't really matter. I still think some of these stocks, I'm not too sure. I'm going to be buying RNW as time goes on, just because it's got such a big gains over the past little while, and it is a nice monthly dividend stock. But I'm not going to go super crazy with it because we'll just have to wait and see if like this whole renewable phase thing is going to keep going, or maybe it's just a temporary thing. We'll just have to kind of see as time goes on. But I do think renewable energy will be a thing of the future. Next up, we have a Severia Corp, which is a healthcare-based company that we have. Accessibility healthcare-based company. I can't even talk this morning. Over the past year, it's currently up 20%, so it's doing quite well. It's a good growth stock with, I think, some future to have some good monthly dividend. It does have a monthly dividend, and I think that dividend growth will come over the next, as the company grows and whatnot. But over the past 5 years, it's up 216%. So this has been a really good growth stock, and over the past year, it's up 21%. So it's done pretty good throughout the pandemic, and it was doing pretty good before the pandemic, so I think it's reasonable to believe that it's going to do well afterwards. It is kind of a newer company though, and not as well known, so it is something that I'm not going to be investing too much into, but I do think it has potential. Next up we have is Shaw, which is a pretty stable Canadian communication stock. Everybody kind of knows what Shaw is, I'm pretty sure. Currently not performing that best for us, but I haven't been buying any shares since we first started this portfolio way back in the day, so that's kind of why they're sitting negative. Also, the stock just hasn't done well over the past little while, so I'm kind of keeping it to my ETFs because I don't think Shaw is really an individual stock I want to hold. Instead, I've been buying some companies like TELUS and whatnot instead. I've been slowly buying a little bit of TELUS as time goes on. It's actually been performing quite well, sitting at currently about 9%. And I do think TELUS is kind of like the better company. If we go over the past 5 years, you can see they're up 35%, even after the pandemic. So, pretty good growth-based dividend company. And that's the thing I like about these Canadian stocks, is a lot of them are just good, solid dividend companies that pay good dividends. They have solid dividend increases, and they're also good growth companies, so they have a little bit of everything. Toronto Dominion Bank, which is my favorite Canadian stock, is currently up about 11% in our portfolio, performing extremely well. It's also about 10% of my portfolio over the past year. They're currently down a little bit, so I still think the stock is still undervalued. In fact, I probably will be buying some TD today as well. And over the past 5 years, it is up 44% in the past 5 years, even after the pandemic, which basically would wipe out a whole year of gains. So the stock has just been performing really well. Really good history, and I just love TD. I think it is the best bank stock. That's why I just have one individual bank stock, and that would be TD, and then I have some different bank stocks in these ETFs, as I'm going to talk about in just a second. So the other big holdings inside the portfolio are the two ETFs, VDY, which is the S&P 500. Obviously, as you guys can, not VDY, VFV is the S&P 500. VDY is like the Canadian version of the S&P 500, but it's more dividend focused. VDY is currently up about 8%. It's our main dividend ETF, and it does account for a lot of the monthly dividend income for the Canadian stocks. And we have VFV, which is a more growth-based US S&P 500 fund, which has low dividend yield but high growth, currently up about almost 5%. So as you guys can see, I talked about this a lot in the past, how the S&P 500, it's really just a solid growth-based fund, and it's slow growth. It doesn't have there's not a lot of hype around it. We don't get huge increases, but it is consistent. Over the past 5 years, it's up 95%, which kind of just speaks for itself. And since we started investing it, I would say I think it was in the end of December we started buying it. It's already up 5%, so pretty consistent, pretty good fund, and I think it's pretty good. And then at the bottom here, we have some different ETFs that I bought in the beginning of this portfolio that I'm looking to get rid of, which is VYM. I will sell once it goes up higher, and then XRE, which I will sell once again once it goes up a little bit higher. So that's a quick little overview of the portfolio. Hope you guys enjoyed that. I hope that wasn't too long. So now let's go over some of the stocks I'm going to be buying, today. I've decided today that the one of the main stocks I want to buy, kind of add more position in, is this Brookfield Infrastructure Property Partners. Not property partners, sorry. Brookfield Infrastructure Partners LP. So this is, like I said, a stock I wanted to buy to just get a little bit of diversification, get something different inside the portfolio that is, once again, a Canadian dividend-based stock. Over the past year, it's down 6%, but over the past 5 years, it is up 106%. So once again, this is predominantly a nice solid growth-based stock with a good dividend yield, and that's kind of the focus of the account here. So we have $300 to spend today, so I'm probably going to spend about 100. I mean, I might buy like one share of this just to add it inside the portfolio. So we'll go through, we'll put that in, and buy one share of BIP, let that go through, and then we're going to go back out, and the other stock I'm going to be buying is going to be TD, because I haven't bought TD for a while, and I do think it is one of the better stocks inside this portfolio. I'm just going to refresh the page really quickly so everything gets updated. And then we'll go down to TD here, and I think I'm going to be buying about $100 worth of TD as well, which will probably be maybe like one share here. So we'll buy one share through here and buy another share of TD, and then the rest of the stock, the rest of the money we have today is just going to go into ETFs, because I haven't been buying too many ETFs recently. I've been buying a lot of individual stocks, so I kind of want to get the balance between the ETFs and the stocks back up here. So let's go back here. We have $200, and I think I'm just going to split it between VDY and VFE, and I think that's probably the best way to do it here. So the allocation I wanted to do for the ETFs is basically have 30% VDY and about 30 to 40% VFE. So we have 25% of the portfolio is VDY, so we'll buy about maybe $100 of VDY, which would be about 3 shares of that. So we'll put that through, place the order, and we'll go back inside the portfolio. We're going to go back to VFE, which once again is the S&P 500. It's kind of our US based stocks and our diversification for this portfolio. And as you guys can see here, VFE is right here. It's also Canadian hedge, which means we don't pay any currency fees, which is really, really nice. And then we have $95, and it's about $88 Canadian. So that's going to probably use up the bulk of our income here. So we'll just put that in and buy one share of VFE, and that should bring us to about 26% of the portfolio is in VFE. So nice little balance there, and I do want to slowly raise that as time goes on. So now that that's out of the way, let's kind of go over some of the monthly dividends we've got over the past couple days. So I mentioned before that I like to keep track of the dividends, and we'll go over the spreadsheet in just a second here. But I just want to show you guys some of the recent dividends we got. So the beginning of February, we got a nice big chunky dividend from TD, which is $19.75, probably the biggest dividend we got to date. And then we got a dividend from H&R REIT, which is about $6.38, which is another good chunk. And then RioCan also gave us a dividend of $5.20. So as you guys can see, the start of this month is pretty solid. A lot of our big dividend stocks pay at the start of the month, and then towards the end we got some of these other ones that kind of add up here. So pretty good income so far. But let's go over the spreadsheet and let's actually see how much dividend income the portfolio has actually made all time. And of course, to finish up this video here, guys, I'll give you guys a quick little update on the monthly income for the portfolio. As you guys can see here, we started the portfolio back in January of 2020, and the monthly dividend income has just been slowly growing as time has been going on. And currently for February, we finished January with $37 of monthly income, a little bit under December, but that's because December was a big month where we had a lot of basically a lot of the quarterly the quarterly dividend stocks kind of paid out in December. So January was a bit of a lower month at $37. February already is at $31 and probably will finish around 40 to 50, I think. And then March will probably be like another big month because we have a lot of the quarterly dividend payments coming out in March, as well as the monthly dividend stocks. So if we add all these up together, that equals to be about $337 in total dividends for the portfolio. So as you guys can see, it's slowly adding up. But if you guys compare the dividends to the actual stock appreciation, you'll see that the dividends aren't that much, and the actual portfolio is actually growing more in terms of stock appreciation. I think that's important to consider as well for a dividend-based portfolio. And before we close out this video, I just want to do a quick little update on the dividend investing case today. So the whole entire goal of this portfolio was basically to, invest into stocks and make enough dividend income to basically live off my dividend stocks. And I know that goal is probably a long ways away and it's going to take a long time to get there. But one of the things to kind of inspire myself and show you guys is I wanted to create a spreadsheet to basically track what my dividends were earning and try to really try the best I could to just kind of live off my dividends for some of the basic things in life. Keep in mind, like some of you guys mentioned in the comments, I'm not actually spending my dividend income here. I'm reinvesting on my dividend income. This is just kind of like a representation to kind of like track things. Okay, if I wanted to live off my dividends, here's what I would need, here's what it would get me. And this is just more like a representation to kind of inspire me that, if we were making like $30 a month. What can that buy us if we were to live off our dividends, kind of thing. So I just kind of want to put that out there because I think that kind of confuses some people. But as you guys can see, here are some basic things that we've been buying with our dividend income, and I do like updates in every other video where I show you guys kind of what I'm adding, what I'm using my dividend income right for, kind of thing. And one of the big things I wanted to add to list was one of the main necessities in life is brushing your teeth, and you should be brushing your teeth and flossing your teeth every single day. So I think a toothbrush and floss are important things that we overlook a lot, but it's kind of essential, right? You need to brush your teeth or else your teeth will go bad as you get older. So I went to the store, I bought a toothbrush. Toothbrushes are pretty cheap because they didn't have any cheap ones, so I bought one for about $2, and then I bought this toothpaste here. It was on sale. I usually spend about $5 on toothpaste. I kind of buy whatever on sale here, but I buy some of the better ones because some of the cheaper toothpaste actually have a lot of crap in them. So I bought some of the better ones here, and it costs about $5. I usually just buy whatever is on sale, but today they actually had one of the really good ones there. So anyways, guys, I hope you guys enjoyed that quick little update, and I just wanted to touch upon that so you guys who follow me alongside the channel can see how we're using our dividend income on a regular basis and whatnot. So anyways, guys, hope you guys enjoyed this video. Sorry for the lack of updates over the past lack of videos over the past couple days. I've just been a little bit busy, but I will be publishing more videos throughout this week. So hope you guys enjoyed this video. If you guys enjoyed it, be sure to give it a big thumbs up, and remember to subscribe if you guys want to see more content on the channel. Take care, and I'll see you guys later.